Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On today's episode, we discuss one of the most interesting points put forth by Bibek Debroy, the chairman of the Prime Minister's Economic Advisory Council, where just the other day he called for a single rate goods and services tax. Now, this is not the first time that he has spoken about a one rate GST. In fact, in the 5 years and few months that GST has been in advent in India, there have been demands several times about reducing the number of tax rate slabs that we have and simplifying and bringing out the full promise of GST into play for the benefit of all stakeholders in the Indian economy. So how feasible is this demand? We are one India when it comes to our indirect taxes, but will we have one rate? If not one rate, but at least one broad rate with a plus or minus here or there. And joining me to discuss that and other questions are two tax experts, Prashant Agarwal, partner at PricewaterhouseCoopers, PwC, and Bipin Sapra, indirect tax partner at EY India. Welcome to the show. Bipin, good to see you after a long time. I'm going to start with you and ask the most important question. Mr. Debroy has said this not for the first time. In March, I recall an article that he wrote where he spoke about this, and in this remark that he made at a public event, he's once again said that while this is good, he doesn't know if this is going to happen. What's your own sense? Is this a debate that is being generated by him, or is this just an economist talking about what is an ideal situation?
Thank you, Siddharth. Always pleasure to be here on your show. Uh, See, this is not a new debate. And if you look at the world economies and where and most of the matured VAT jurisdictions, most of them have a single rate, whether it's Singapore or UK or France or Canada. Most of the places have a single VAT rate, whether it's 5, 6, 7, 17, 20, whatever the rate is. There is generally a fixed rate, and then there are multiple rates when it comes to post exemptions and other things. We had a debate when the GST was being introduced, and at that point of time, the then economic advisor had come out with a white paper on this. And according to him, the revenue neutral rate should have been 15.5%. What he felt was that economy, one rate is not a possible scenario in an Indian situation, and it would be highly inflationary. So it made sense that it should be split into two broad categories, being 12 and 18%. What happened ultimately was that there are five rates: a nil, a 5%, a 12%, an 18, and a 28%. So what you have to realize is that there is a plethora of goods and there's a wide spectrum of goods uh, which are being taxed. And given the way the Indian economy is and the society is, these goods are being used by people across the economic spectrum.
Right.
And to get everybody at a single rate, which would be closer to a 15%, if we go by the number which the economic advisor gave at that point of time, to move goods, say things like rice, dal, atta, which are today at 5%, to a 15%, would be highly inflationary. While we may be able to get services, majority of services and capital goods down to 15% from 18%, but it will be a highly inflationary from a consumer society. So it's given the Indian scenario to have one rate. I don't think we are really ready from that perspective. It makes sense from an economics perspective. That's what is happening across the world, one single rates. But I would still go with at least two rates when it comes to India.
Okay, that's a good point, and Bipin has explained to us viewers that why you could not have an ideal economic treatment of what is clearly a very important point. Prashant, I take that point forward, and before I ask you a more elaborate point, would you even agree with the fundamental principle of a one rate indirect tax in a country with a very diverse economic structure as well as great amount of diversity when it comes to the taxpayers?
So thanks, Siddharth, for having me. And hi, Vipin. So I think the point that Vipin makes a lot of sense. Then, uh, as you rightly said, in a country as diverse as ours, both from a geopolitical and social demographic, if you look at it, and the fact that we have a federal structure where we had to honor both central and the state, because you should remember that at the end of the day, why we have multiple rates is also a fact that center has to also compensate states over a period of time, and also agree with the states on what should be the rates. Under VAT, in our earlier regime, we did have multiple rate structure, so it was not easy to come down to one rate as such. So if you ask us, one rate, is it ideal? Answer is absolutely yes. It gives you clarity around revenue, it gives business certainty, it also helps you reduce litigations around what should classify under 5, 18, 12, the multiple litigations that go around it, eases the whole ease of doing business, compliance is everything. But in a country like ours, with the amount of parameters that you're looking at while deciding a rate, it would be very difficult to come down to one rate. Of course, the number of rates we end up having to meet everyone's requirement is also not ideal. And therefore, I believe even the government understands that. I would say even GST Council understands that, given that in the 45th Council last September, we already have a GOM for rate rationalization. So I think everyone realizes the quantum of rates that we have. Five is just a number, but if you look at the number of rates we end up having, 0, 3%, 0.25%, 1.5%, 5%, 12, 18, 28, 28 plus cess. So we have it all kind of flavors with us today. So therefore, what is very important, and the important thing, crux that we need to take out from Mr. Debroy's comments, is the fact that there is a need to look at the rate structure that we currently have. And it's critical and high time, given that we have already gone through the 5 years journey, given how the revenue collections are looking like as of now. It's high time that we start taking some of the tough calls in terms of what should be the rate and bite the bullet around it and come down to those at least certain level of rate rationalization at this stage, probably continue it for next 5 years, relook at a 10 years time period where we stand and look at that journey once again. So I guess it would be this way that the rate rationalization or the structure should be looked at. What we currently have is not a happy state. Will we reach one rate? I think it's out of question. And even Mr. Debroy says it's what I as economists believe, but will it ever happen? I don't think it will ever happen.
This is a good point, and for our viewers, the debate around rates is obviously the most headline grabbing item, but there is a lot of structural, I think, benefits that the GST has brought in. Vipin, I'm coming back to you, and also to add another crucial element. You cannot be even discussing one rate or maybe two rates or three rates, given the fact that there is a massive portion of our economy which is outside the GST net: alcohol, petroleum products, land, and thereabouts. And while we know the kind of taxation that we have to pay as consumers on petroleum products, by so many exemptions, now in the sixth year of GST, has GST been hobbled by our policymakers because they are unable to move forward on this? And I think, frankly, perhaps even the center has given up.
You're right, Siddharth, and I think the easiest solution is to have a broad base, to really get a rate down and to really make it less inflationary. If you really do the numbers, and while the GST was being introduced, we were doing all kinds of numbers. And uh, when you look at, if you take the GDP and if you divide by what the tax neutral amount was at that in that particular year, and if you taxed everything, you would need to tax everything at a rate of 11 to 12%. That's what the number was, ideally. But that means get the fuel in, get the alcohol in, get the land in, uh, remove the GST cascadings, remove exemptions to a major extent. That's one extreme. But we are saddled by a lot of exemptions, a lot of uh, uh, GST where the GST is not applicable. That's really vitiating the whole system. I think if the revenues have to remain at 1.5 and higher in the going term, and as inflationary pressures reduce over the period of time, to really bring genuine growth into the systems, the base has to be widened. You're absolutely spot on that moment. And all of these are should come into the play. And it's not only the center who's going to benefit from it, it's the states who are going to equally benefit. And given that the compensation has ended since July, it's in their interest to get these things in as soon as possible, and not really tinker or try to increase the rates, because there are numerous studies. The moment you increase rates or beyond a particular point, your revenues would actually go down. So you're right. Broaden the base, bite the bullet. Um it's going to be beneficial for all.
Uh, Bipin, why do you think there is reluctance on behalf of the GST Council, which is a federal body, all states are part of it, as well as the union government? Why have they not been able to move forward? Is it just because of the fact that the revenue collection projections have not met earlier estimates, or is it to do with politics perhaps?
See, I think revenue projections, the growth has happened. If I really look at a CAGR of 12 to 13%, it's there. 14% was what was anticipated, or what was the basis on which compensation was fixed in the constitution. We are there, very close to it. 1.50 lakh crores of collection per month. I think we are getting there. We can do better, obviously. uh, so revenue collection is only one part of it. I think they also know, everybody knows that it'll get there. There are difficulties in taxing certain products. There's no doubt about it. Alcohol has a very complex mechanism. I think the states need to take baby steps to move forward and get at least alcohol within the get a constitutional amendment to get it within the GST. What is already there within the GST and the petrol, diesel, land, multiple exemptions, multiple stoppages of credits, those need to be at least. We have a GOM on rate rationalization. I think the whole industry is looking to see a lot more broadening of base and a lot more streamlining of rates from them. And we should see the report coming out in the next couple of months, if not earlier.
Right,
Uh,
right.
so yeah, I think there might be political pressures. You cannot wish that away, but there are certain difficult commodities to tax. But world has taxed them. The VAT jurisdictions have taxed them, and there are best practices available.
Right.
We can follow that. So I think the time has come for all of these to happen.
Prashant, let's turn our attention beyond what has been said on one rate, which is clear from both of you that perhaps Bibek Debroy is intending that there should be a continuous debate, and hopefully rate rationalization will happen, which Bipin told us that report could come in the next couple of months. Explain for our viewers in the simplest possible manner, what are the two or three key difficulties that you see need to be fixed very quickly for GST to truly become a good and simple tax?
So I think the first thing, as I picked up earlier, and if you're only focusing on, let's say, the rate part here, so the first thing will be to reduce the number of rates that we are carrying today with us, because that's the most I won't say ambiguous, but that's the most difficult piece to take care of, because at times it seems like the taxpayer is playing on the tax rates uh, to ensure that they are able to do better business. So the idea should be to simplify that tax rate structure, and also it impacts the final price to the retail customer, and hence it's important to look at how can we minimize those rate structures. So I think that's the first specific thing that should be looked at, how we can ensure that whatever are there as 5, 12, and 18 and 28 can we make it into three structure, which already has been discussed earlier. Can we merge 5 and 12%, make it 8%? Can we basically take care of the 12% into a bracket of 18%? Those are debates which have happened. We hope that with this GOM, as Vipin is saying, there have been multiple rounds of discussion. The report has been awaited for quite some time. But for the consensus, we believe. So if that comes up, as new reports have earlier said, perhaps the move could be towards reducing the number of exemptions that the government is carrying at this point of time. And that's been the government intent. Otherwise, also, even in customs, they've tried to reduce the exemptions. So probably number of exemptions going down, rate moving from 5 to perhaps 8% and 12% again coming back to 8 or 18. So you reduce the number of slabs. That's one that you can do. The other thing is to start taking some steps on reducing the goods which are outside GST. Now, petroleum is a pet subject that we all have, and we all know, and alcohol for that matter. But unfortunately, these are the golden eggs which the states carry, as well as center. I won't say center does not also look at it, because we have seen how taxes on fuel has helped the central tax kitty as well as states for that matter. So both have their interest in terms of why it should be kept outside GST for now. So I guess just to show the intention, we should pick up a few products. So let's say natural gas for that matter. There have been a lot of discussion around natural gas. One thought that it is very near to getting included as part of the GST and the rate around it. That could be a good step to start with, if not petroleum and alcohol. So that gives at least a vision to the country that we are trying to move away from multiple taxes to ensuring that
Right.
the goods are there. The other thing that you can look at is, if you remove exemptions, you're also removing the tax cascading effect. So, for instance, electricity. Now, it's a political issue that visibly, if I tax electricity, you're taxing the end customer. But fact of the matter is, if you don't tax electricity, there is a lot of tax cost that is sitting, and which in some ways going back to the customer in terms of tariffs. So, can we simplify that rate structure and look at even taxing electricity, so that the tax electricity producers can actually take credit and ensure that that pass on as a benefit to the end customer. So
Absolutely.
those steps would really show that we are serious about simplifying the tax regime, ensuring the principles on which GST was building, which was simplified tax for everyone, tax everything, reduce the tax cascading effect. That is actually brought into picture. And I
Okay.
think the time has come for taking some of those steps. As I said, given the collections, the boom around it, or how you're looking at it, it would really be something that should be looked at more practically. And some of those compromise steps can be taken, and not everything can happen in one go, for sure.
Bipin, I want to ask you about how the experience of dealing with exemptions has been as a comparison with direct taxes. We know that alternative income tax scheme was offered to income taxpayers in India, where they could opt out of claiming some of these exemptions and see a more simpler way of paying their taxes. That scheme hasn't taken off. Now, I'm not trying to compare it with GST, but from that experience, do you think reducing the exemptions, let's say maybe just petroleum, for example, would that make a qualitative and quantitative difference to both GST collections as well as the end consumer cost?
See, for a student of indirect taxes, VAT, GST worldwide, exemptions are the worst form of benefit you can be given. Uh, what you have to realize is, think of any commodity, think of school education. Uh, if school education is exempted today, uh, there would be uh, there would be a lot of inputs which would be going in, which would be taxed. So the school has buses. Buses has there would be purchase of buses. There would be a tax on that. There would be purchase of uniform. There would be purchase of furniture. There would be purchase of there might be rental premises which on this. So a lot of GST elements would be there as input cost, which would be getting included as a part of cost, because there is no output GST on which these can be become creditable. So if ideally a 5% GST was to be introduced on a commodity like education, there is already a 3 to 4% tax or equal to 5% or higher, which would already be there because of input tax, which the final consumer or the students are already bearing. It's an eyewash. Exemptions are always an eyewash, and that people have to realize and ask for genuine benefits where it's necessary. I would be very happy for the exempted commodity. And there might be some cases where maybe some schools where these facts may not be true, but generally in big city schools, these might be true, big city hospitals and other places which are generally fully exempted. These things might be true. And if credit flows, their margins would go up rather than go down, the hospital. So exemptions are the worst form of benefits. People realize that it's the those need to be removed. Petrol and diesel are a difficult commodity. The reason why these are not being taxed, or what would happen once the exemption is removed, is because these are regulated. The prices are regulated here to a large extent. Uh, and second, there might be leakages in case they become rarely creditable. Those are things which safeguards which need to be built in. What Prashant said was spot on, that we should start taxing in these products with gas and certain other things where credits can be taken. ATF with the fuel for the aircraft, those things are things which we can start off with, take steps, but move in the direction where we tax petrol and diesel also. Today also there is a huge element of VAT and excise which is going there on these petrol and diesel, yet it's regulated. So it would not matter. It would only bring down a lot of cost which is going there as input credits would become creditable once these petrol and diesel come into the domain. A, a white paper needs to come out outlining all of these and what are the costs and benefits of actually taxing this, so that people get aware of why the government is taking those steps, why the GST Council is taking those steps, and a political will needs to be created to tax these. Similarly for alcohol, similarly for land, similarly for other things, simple things. There's a warehousing. Somebody who has a warehouse can't take credit of the items which of the warehouse is being made of, the
Right.
thing, and he's providing a GST. There's so much of cost already going in. Those credits need to be allowed. So there are a lot of anomalies out there. After 5 years, we are ready to get those anomalies fixed. We are looking at the rate rationalization committee to rationalize the rates. We are looking at the GST Council in general and law committee to look at those credit issues and other things, and really get these things in the right space.
Well, that's a good point, Bipin. And we started this conversation by quoting Bibek Debroy and his latest point about a one rate GST. And I'm going to end our conversation with Bibek Debroy again, where earlier this March he wrote Lalayat Panchavarshani Dasha Varshani Tadayat. Now, I hope I got the pronunciation right in of this Sanskrit saying. It is supposedly ascribed to Kautilya or Chanakya. And this line says, nurture a child for the first 5 years and strike him with a rod for the next 10 years. I guess that perhaps is the best way to end the show by saying that GST is 5 years old. This July it completed 5 years. We are now in the sixth year, and very clearly significant reform needs to be done, even as the Indian reality may mean that while we are one India and we will continue to be so, perhaps a one rate GST may not happen, at least for the near future. Bipin Sapra, Prashant Agarwal, thank you very much for your time with us as we tried to decode whether there was a possibility of a one India and a one GST rate. Thank you very much for watching. With that, it's a wrap on this show. We'll be back with more. Do stay with us and continue to like, subscribe Business Today on all the social media platforms that we are available on. Goodbye.